and welcome back. So today we're going to start going into charting, how to understand it, and then this is going to give you a good idea on when to buy and sell some stocks. So when you open up Thinkorswim on your chart, it might look like something like this. It could be a lot going on. So right now, this green and red candles is the price. So red typically means there's more sellers, green means there's more buyers. This blue is volume, so it just means how many people are actually in the trade at a given time. And so what we're gonna do is I'm actually gonna change this up a little bit to make it a little bit more cleaner. So what you can do is if you go to this little wheel with this gear, if you just kind of click it, this should pop up. And so what you should see is right in general, you should see under settings, this overlap volume. So if you go ahead and unclick that and click apply, it should take it down. So it'll make the chart a little bit cleaner. And then you could also play around, see what works for you. And so what we're gonna do is we're actually gonna go to appearance, and I like to have my volume, these blue bars, to actually match my top bars. So if you just hit color as symbol ticks, again click apply and then click OK. Now you're gonna see kind of green and red. And again, this is just more for preference. So then I could kind of see when the volume is going up, if there's more sellers or more buyers. Again, this is what the green means. And then you could also just take it and kind of bring it up. So then the volume is a little bit higher. So what you're going to do is I'm going to change my drawing tool to kind of zoom in a little bit more. And then you could see right here, this plus and minus, if you do go zoom in and zoom out, if you do go in a little bit closer. So right here on this top bar, if you click the drawing, if you go to drawing tools, and then I'm just gonna click this line, it's the trend line. So what you're gonna do is if you just click it, and then it should turn gray, and it should zoom in a little bit. So now what we're gonna talk about is just the candles and what the candles mean. And then I'm also gonna post a chart where there's different candles, what each one means. So then you could definitely practice it and understand what the price is telling you. So right now I'm under day, as you can see day, and these are just the time frame. So this is each candle is for 1 day of trading, and then you could trade it. You could change it to 1 hour, 5 minutes, 1 minute, whatever. Again, is your preference. If you're more long term, one daily, weekly, monthly, these are all good charts to use. So let's just look at these candles real quick. So this is a candle body. This this is what the candle body is called. And so with the green, again, green just means there's more buyers. So right here with the green candle, it opens up lower and it closes up higher. So that's why it's a positive, there's more buyers. And then these are called wicks. So wicks is just where the price traded. This is the high and low of the day, but majority of the trading is in this body. So that's where most of the trading takes place. But you'll see it does go up to, if you look onto the right side, 134.28 and the low of 129. So it did move, and then this was the trading. So again, this is called the candle body. These are called the candle wicks. This is where the price opens and this is where it closes. On a green candle and on a red candle, it opens up here, it opens up higher, but then it closes lower. So the sellers took place. So for this candle, it opened up at 138.18, but it ended up closing at 134.89. So the stock went down roughly $4 for that day. Again, it went up a little bit and then it went past the close, and then it ended up closing here. So that's mainly what the candles mean. And then you'll see some where you'll see a little bit more of the wick. And so so bullish means going up, bearish means going down. So a bullish candle, again, I'm going to post a chart at the end so you can just look at it. When there's a wick here, even though this is a red candle, so the price actually went down to 126, but it ended up closing at 129. So that means there were some buyers coming in to actually push the candle up. So you could kind of see right around here, this high candle 145. You can see it opened up at 143. It closed at 142, but it also went all the way down to 136. And the long wick just means that there was a lot of buyers coming to push that price back up. So that's what just kind of the wicks mean. So when there's a longer wick on top, it's usually more of a bearish because there's more sellers pushing that candle body down. And if the wick is underneath, it means that there's more buyers trying to push the price up. And then when it's in between, kind of right here, this is called a doji. When there's about equal wicks above and below the body, it just means that there's an indecision. There's kind of a battle between the bulls and the bears, and there hasn't been a decision. So you would have to kind of wait the next few days to see if it's going to go up or go down, because it could go either. And you could see it went up and then it went kind of came back down. So these are just some things to play around with. Again, you could change the volume, you could change the colors. Again, whatever's more um, preference for you. This is just the way I like to do it. I like to have the red and green and also with the matching volume in separate. So it's just a little bit cleaner. So hopefully you enjoy. And in the next video, we're going to actually start drawing resistance and support.